To build anything that truly lasts, it takes time.
Let me welcome Narendra Solanki, Head of Fundamental Research Investment Services at Anand Rathi and stockbrokers, joining us on the show. And Narendra, very good afternoon and thank you so much for your time. Eternal, let's start with that because that stock is still holding on to the gains of 11.5%. Help us understand that how are you looking at the stock movement from here on, and how much more headroom do you believe can be there for the stock from these level itself, because it is indeed an all-time high level for this particular counter?
Yeah, good afternoon. I think the results were good, especially if you see on the part of Blinkit, then the results were very exciting. And coming to the food delivery business, I think it has seen a moderation, but I think the margins are slated to improve and the growth should also continue to remain strong. So on both fronts, we continue to see improvement for the stock going ahead. Especially the Blinkit turnaround is very positive for the company, and that has been reflecting in the prices of the stocks lately. So we are still positive on the stock for medium to long term.
So that's the take on Eternal. Narendra, hi, good afternoon. This is Nehi also joining in. I want to get your sense on what has got the entire Nifty PSU basket so spooked, because second consecutive day of big losses coming in over here. You have select names like Canara that are down and out by about 3% as we speak. What is marring the entire Nifty PSU bank pack, and what could be the reasons? Because the earnings overhang, yes, we have seen from some of the group companies from the Nifty pack, Nifty PSU banks pack. But other than that, don't you think that reaction is being a little overplayed right now?
I think it's a mix of two factors. One is definitely a reaction of the earnings, and the other is like if you see the historical performances of past 1 to 3 months, then the PSUs have outperformed their private peers on back of improving fundamentals like improvement in the interest margins, improvement in the profitabilities, and the gradually declining NPAs. So the valuations have also started coming very close to their private peers, where some PSU banks have started trading at around 1.5, 1.7 times book value. And the majority of the pack on an average was trading at around zero point 0.9 to between 1.1 price to book value, while their private counterparts, like larger private banks, which once traded at above at higher than 3.54 x book values, are still trading below somewhere between 2.5 to 3 book values. So the valuation gap has narrowed, and I think it's a combination of near-term profit booking on back of earnings reaction. So these both factors have played out, but our view is still PSU as a pack is still looking better in comparison with the prior peers, at least for the next 2 quarters.
All right, so that's the take coming in on the PSU banking pack. Yes, of course, that's been reeling under pressure. But Narendra, off late, the chemical basket is doing very well because it's UPL once again a 52-week high coming in on this particular counter. Along with that, some of these laggards, and especially like stocks like Tata Chemicals, they are trying to make a comeback. Do you believe that chemical as a pack is ready to move a long way from these levels, and it's a bit of a turnaround story? Because whenever the sector churning takes place, it generally starts from the large caps, and that move trickles into the mid and small end of the market.
See, in chemicals, I think it has to be mentioned that there are different aspects to it. So one is commodity chemicals, and other is specialty chemicals. In specialty, also there are various industries which are linked. So right now, we are more positive on specialty chemicals, which are more connected to the agriculture space in terms of fertilizers and pesticides. So those stocks should perform well. However, in specialty and commodity chemicals, other than these sectors, we think that although the downside is very downside is not there, but the upside is still not that promising in the face of the if you see the overall price pressure inventories and the Chinese situation, if you see overall. We think that it would still take some more time, 2-3 quarters, for overall chemical space to go and perform really very well. But yeah, some pockets in specialty chemicals which are into fluorochemicals and battery chemicals kind of space, that might show some early signs of recovery going ahead. But right now we are more focused on chemicals which are more connected to the agriculture cycle.